All right, major averages coming off of 7 weeks of gains, as we mentioned. The S&P less than 2% away, hard to believe, from its all-time high. Evercore ISI's Julian Emanuel has a 2024 S&P price target of 47.50, and he joins us here at Post 9. So you expect the market to do nothing between now and the end of 2024?
The market's going to do plenty between now and 2024.
We're at your target.
Yeah, that's true. So from our point of view, you think about it, it has been an amazing year in the last month and a half. No question about that. And look, what we see is, again, and you mentioned this, the statement now, nothing can go wrong. And so the way we think the market is priced is that whether it's inflation running slightly too hot, the economy running slightly too cold, or earnings, frankly, prior to the last couple weeks, there's always been this knowledge that earnings estimates were likely going to come down and too high for 2024, and that makes sense. But there is now a belief that that may not be the case. We think things are very, very fully priced here, and the disappointment is that something doesn't go less than perfectly, and you get a typical sell-off. Frankly, the typical sell-off in an average non-recession year is 13%.
Well, I love the statement, which is why I quoted it this morning. But also, I love the research that you went back and looked at between hikes and cuts to show which sectors clearly outperform. So is that the playbook?
Yeah, that is the playbook. Now, you have to think about it a little bit differently because, well, we all know the cycle has been incredibly different in the first place. But you would maybe have been skeptical of communication services being defense now. In fact, there are several elements to a sector like that has the more traditional rate-sensitive sort of telecom aspect to it. But also, think about this year. That's an area of the market that even if we go into a recession, and Evercore is calling for a mild recession, is that you're still going to get ad spend because of the election and because of the Olympics. So very positive there.
What if I just say to you, forget your defensive names. I just want to own the Magnificent Seven because they go up every year, and 2024 will be no different than 23 or 22 or whatever year well, not 22 as much, or what most of the years that we look at.
So, look, again, going back prior to the financial crisis, you cannot fault that logic. The only year where you could fault that logic was 2022, and part of what our concern about the consensus being so dug in right now is that at the end of 2021, it was that mindset, growth stocks forever. Obviously, that didn't work. From our point of view, what you're likely to see, given the fact that you've had such a concentration of return in those names this year, is a pause. Generative AI has really driven a lot of these names. Long-term, the earnings growth trajectory looks fantastic, but we think this is actually a time where the companies that are actually deploying generative AI are going to benefit as opposed to the companies that enable it.
So your advice would not be to buy an index fund for next year if you don't think the S&P is going to go anywhere.
No, it would not. And we've had this conversation a number of times in the past, is that the one thing you don't want to do, and if you think about the last 2 years, people have done this very, very frequently, is give in to your emotions. The emotions are very strong right now, very bullish. This is the time to sit back, and if we're right about expecting somewhere between a 10 to 15% pullback, you have to see yourself as a buyer there. And the answer is, if you can't see yourself as a buyer in that kind of pullback, you either lighten up a little bit of cash, but then ultimately skew towards defensive, because that's going to outperform in both sides of what we expect to be the cycle.